Welcome into a brand new episode of WSI TV. Enjoy the show.
Welcome back to another brand new episode of WSI TV. I'm Jordan Bishop and this is Jim Sampson.
Hello.
Now before we get into the good stuff that we got here for you today, I want to say please visit WSITV.com. You can sign up for our free daily newsletters. You'll also get access to the WSI Vault for free. There's a lot of great stuff in there ranging all over the financial markets. So make sure you sign up for that. Now, what we're getting into today is something that multiplies your profits by 10 times, right? And we're talking about the same trade here, the same profits, just doing something a little different that we're gonna explain will multiply your profits by that much. We're gonna talk about, again, turning a 10% gain into a 100% gain. So Jim, before we get into exactly what we're talking about here, could you just give us a little note on leveraging and what that means in the financial markets?
Yeah, so leveraging is just basically a way of giving us more bang for our buck. So if I'm say I put $100 in and something goes up 10%, then I get 10% of my $100. But if I'm leveraged, then maybe I can get more like $150 or even $200 on my $100 for the same trade.
Right, and of course you can leverage in many different ways. We talk about leveraged ETFs all the time, which is basically a basket of stocks times 2 or 3. There's even 4 times leveraged ETFs out there. You can also do margin trading, but we're going to keep it simple here today, and we're just going to talk about options. So Jim, for the people who maybe look at the word options and shiver a little bit thinking it's overly complicated, how would you simplify it for them?
So options, we've got multiple ways. Let's say stock XYZ looks like it's going to go up. We could buy the stock XYZ, or perhaps we could buy options on the stock XYZ. Without going too complex with it, we're just going to say, look, within a given time frame, we're making a bet that this is going to go in a certain direction. Options are going to enable us to do that with a lot of leverage and in a lot more, bang for our buck.
Right, yeah, it's a great way to jump in and again, amplify your gains, multiply your gains. And it depends, we'll get to the specifics here in a second on how exactly you multiply them in the right way. But most of the time it's by 10 times. Like I said, a 10% gain becomes 100. But there are ways of tweaking that, which we'll get to. Just as an example here, this is the chart of USO, and we actually traded this back in the summer of 2018. The stock, this tracks US oil, the stock went up 10% here, but what we made was 103% gain. Right. Now, that was using options, like Jim just explained. So again, there's the proof there. It went up 10%. We made 103% gain, as so did our viewers who run this. That one, yeah. Everyone who has Make Mama Millionaire got in on that trade. So let's dig into exactly what options are a little bit, because there's going to be a load of terms that people hear when dealing with options. It's obviously not as complicated as it seems. So Jim, let me ask you, I'm just going to throw you some terms here, and if you could give a brief explanation of what they are. So a call option versus a put option.
So if we make a call option, we're betting that something's going to go up. If we make a put option, we're making a bet that something's going to go down. In both cases, we're buying. This is where it gets confusing. I'm buying a call or I'm buying a put. What I'm doing is I'm buying a bet that it's going to go up. I'm buying a bet that it's going to go down. Think of call as up. I pick up the phone to make a call. I put down the phone when I want it to go, put down the phone to go down.
Right, and one thing you'll find is buying a put option most of the time is easier than shorting stocks. I mean, we don't want to get in.
Thing. Either way, you have a mechanism in place to just bet something's going to happen.
Right.
Where it gets different with options is that we've got a time frame in mind. The key to making money with options is that something's got to happen for you in the right direction, like quickly. The only thing you're really buying with options is time. You're not buying anything intrinsic. It's called a derivative because it's derived from something. Imagine we're talking about a stock XYZ that we think it's going to go up. An option is something different for that. It's a different kind of shopping expedition, as it were, right? Think of it as oranges and orange juice, right? We go into the supermarket, we expect to pay a certain price for oranges, but a different price for orange juice. Orange juice is related to oranges, but they're not the same thing. And that's the other point with options to remember is that we're not just buying time, but we're in a different kind of price gauging process.
Right, and you also you mentioned time here, how time's important. So that brings us to expiration.
So that's the other part of the thing we have to do. Not just deciding whether it's a call or a put. We're betting it's going to go up. We're betting it's going to go down. But within what time frame? Remember, we're just buying time here. Do I want 1 month, 3 months, 6 months, 2 years even? Things can go up. But obviously, the more time you buy, the more expensive it gets.
And of course, this is where the analogy of orange goes off, because you can't choose your expiration of the oranges. Of course, they're just going to go bad when they go bad. So you got a little more freedom here. And of course, that brings us to the strike price as well. How would you define the strike price?
So this is where it gets another thing with options. You can't just, if stock XYZ is trading at $10, that's fine. But we're talking about options now, and we can choose a multiple of prices where we think, well, what price is it going to go up or down within that range?
Right.
To keep things simple, and I think quite effective as well, we just stick to whatever the current price is. That's the strike price we choose.
Right, exactly. And this, of course, varies from system to system. Some of you may be on Rogue Insider. We teach it a little bit differently there. But just as a base point, yeah, it's great to pick a strike price where the stock is right now, and you're betting it to go up. So it should be above that strike price. Which then brings us to the last definition I'm going to ask you for here, bid versus ask.
Right, so one price, we're going to pay two different prices. We're going to pay a price if we're buying something. And this is the same with stocks, actually.
Right, yeah.
There's always two prices, and this is where the brokers make their money. There's a price that you're going to pay if you're buying, which is always the telltale sign is if I'm buying something, I'm going to pay more for it. And there's a price if I'm betting it's going to go down, or I'm selling it, which in other words, getting out of the trade. And that would be the lower price. So if I'm buying, I'm going to get the higher price, and I'm selling, I'm going to get the lower price. That's the bid and the ask.
Right, it's as simple as that. And there's your quick and easy way of multiplying your gains by 10. You would just take the stock you're looking at, of course, and then go buy a call option if you bet it goes up, go buy a put option if you're betting it goes down. And it really is as simple as that.
The current strike price and an expiration we just tend to find works with like 3 to 6 months.
3 to 6 months is great with the expiration. And like
don't read too much into it. There's going to be a whole load of numbers, but if you just stick to that formula, and most of all, you think that this is going to happen with a quick time frame, movements on our side, and if in doubt, just use one of our very profitable services right there now, giving options picks.
Exactly. So Jim, I appreciate you coming in and clarifying what options are for all our viewers. I appreciate you joining us. We'll talk to you next time.
Talk to you next time.
Cheers.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV vault. So go ahead and claim this gift for free now at WSITV.com.